ahead at this point. But let's come to specific stocks that should be on your radar this morning, and quite a few announcements over the weekend as well. I'm starting with LIC, and I would say a mixed set of numbers, but largely a thumbs up only because of how their margins have grown, and this was better than expectations. Growth overall slightly below expectations on LIC, but value of new business was a beat, and margins, that's VNB margins, value of new business margins, an extremely strong beat. So the net premium income was down 8.6% to 1.07 lakh crore versus 1.17 lakh crore. Net profit was up 16% to about 11,000 odd crores. So an improvement there. Total annual premium equivalent was down 24% to 9,950 crores. So that's, I would say, the negative on it. Value of new business was also down 27%. Remember, a lot of new surrender rules have come in for insurance policy, and that impact is being seen. But the saving grace, so to speak, for LIC is margins. VNB margins were up 150 basis points to 19.36%, which is why on those metrics, it's being seen as a bit of a positive. There you have it, all of the details there on your screen. So LIC, watch out for it. Obviously, insurance pack will also be in focus simply because of the numbers that have come in both in general insurance and life insurance. On that parameter, LIC wasn't that great, but just based on the numbers and then the conference call after, where now the focus for the management is going to be on the agents channel. That might see a bit of a positive. Not so much for Amara Raja. Amara Raja is a thumbs down. All along, we're taking standalone numbers over here for Amara Raja. Revenue was up 10% at 3164, but EBITDA was down 4% at 415 crores odd. Margins were down about 195 basis points at 13.14 versus 15.09. Net profit up 23%, but the net profit up 23% because of a one-time exceptional item of 111 crores. That's what's positively impacting the profits. They also received 175 crores towards an insurance claim for property, plant and equipment, and the claim was lodged on account of damage due to a fire accident at their manufacturing facility in Chittoor in 2023. So this is where they got 111 crores. Overall, but demand has been slow for Amara Raja. The conference call will be today, so that's one factor to watch out. Management commentary, that is, but overall not great. Defense, we spoke about defense. The aero show is on, but Paras Defense numbers on its own looking pretty good. So a thumbs up there for Paras Defense. Third stock on my list. Revenues up 33, nearly 34% at 86 crores versus 64 crores. EBITDA up 77% at 22 crores. Margins have gone up quite robustly, healthy upside in margins from 19.4% to nearly 26%, and net profit at 15 crores versus 7 crores. I quickly just wanted to add Brainbees. I'll take a second for it, just because the numbers looked interesting for a company in this space. Revenues up 14%, EBITDA up 84% at 108 crores, and margins have gone up fairly decently, 3.1 to 4.9 crores, 9%. This is a stock that has been beaten down a fair bit. Even at last rate, it was down about 10%. That's because its lock-in for its IPO is ending. Investor lock-in is ending, and there's a whole host of other companies which are in that space as well. But their net loss has also come down a fair bit. And their inventory levels have destocked, which is one of the reasons for their number. So just a quick word on Brainbees there.
I have got 3 thumbs ups on my list, and they're all on the back of earnings, which is what was the point that we were making earlier, or at least I was making to Neeraj. Fortis Healthcare is the first stock that I will talk about, and it's looking very good against the estimates, consensus estimates. It's beaten it on several fronts. The revenue is increased by close to 15%. The EBITDA is up about 32%. The net profit is increased by 84% to 284 crore rupees. There is an exceptional, but even if you account for the exceptional, it is still a beat. The margin is at 19.5%. What are the factors that have worked for Fortis? The revenue growth in the hospital business is led by the average revenue per operational bed growth, which is close to 10%, a very strong number. 6.2% growth in occupied beds, and the occupancy stood at 67% compared to 64% in the comparable quarter a year ago. And in fact, it is looking like a very good company or result. Remember that a lot of these healthcare companies have been buzzing in the recent past, so that's a thumbs up and you should watch out for it at the start of trade. The second one is Action Construction, and actually this result bodes well for the rest of the space as well, I think, because the revenue grew by a healthy 16%, you had EBITDA growth of as much as 31%, the margins have expanded, and the net profit is up as much as 26.5% at 112 crore rupees. Of course, this company manufactures construction equipment, and so if this company is reporting a 16% growth in revenue, it certainly bodes well for the rest of the space. And the final stock that I'm talking about today is Balu Forge, which has a very strong set of numbers yet again, 74% growth in revenue. The full year expectation is a growth of 55 to 60%, which seems comfortable at this stage. The EBITDA has grown quite considerably as well. In fact, it's more than doubled. It stood at 67.7 crore rupees. The margins have expanded, and that is expected in a range of 25 to 27%. So this was also in line with their own expectations. And the PAT number is more than doubled as well. The revenue was led by client addition as well as specialized engineering products. And the margin expansion was on account of an improvement in scale as well as a change in the product mix that the company has reported, Neeraj.
So, well, those are the three or a few stocks. I'll just quickly add the ones that are on my list. I'm starting off with, I'm giving you a good number, a bad number, and then some other news. So the bad number is delivery. And I thought it was bad simply because it came in way lower than estimates. Keep an eye out for that. The net profit came in at 25 crores versus the estimated 66 crores. And even the revenue number and the margin number was okay. Brokerages have given a bit of a thumbs down to this. Goldman Sachs, for example, has cut the target price to 370 from 400. I would suspect that delivery could see a bit of an issue in the quarter. And keep in mind, I mean, loosely, there's a platform company in logistics, and most logistic companies have actually come out with good numbers. So delivery might see a bit of an issue today. The insurance data looked very strong. HDFC Life was the fastest growing player in Jan 25 with 25.3% of retail APE growth, which is the annualized premium equivalent. This is the metric on which a lot of analysts evaluate insurance companies, and HDFC Life has grown very well. SBI Life has grown about 18.4%. ICICI Pru has grown about 8.7%. And I think from the brokerage's note I was reading, I think it was a Nomura note, which said that the ask rate for both HDFC Life and ICICI Pru to meet their annual guidance is now very, very low. So they don't have to do too much in the months of February and March to meet the guidance. So therefore, if you think of all of those things, HDFC Life did well in the month, ask rate not very high. I would suspect that HDFC Life could be a stock that could react. And boy, do these stocks need reaction, because HDFC Life has been around this price for maybe the last 5 years. The stocks haven't gone anywhere. And therefore, I think it does need, look at that. I mean, just around that price, right? This is the 12-month chart. If you look at the 5-year chart, it pretty much looked the same thing. Gone up, gone down, and then back to 600 odd levels. So virtually gone nowhere. I think they need some triggers. So watch out for HDFC Life. VATech Vabag is the third stock on my list. The numbers were okay, but I think the more important part for VATech Vabag was the order win. 3,200 crore order for wastewater treatment from Saudi. Now remember, viewers, it was the Saudi order loss that really hit VATech Vabag very, very badly, and the stock came off from 1,700, 1,800 all the way to current of 1,360. The fact that they won this order, and this is an EPC order, might help VATech Vabag, so watch out for that. And last but not the least, I'm adding a very quick fourth one because M&M deserves this mention. We'll have the management, of course, at 9:40 live today, so you got to tune in for that. But look at the brokerage view on Mahindra & Mahindra. Nomura maintains buy, hikes target price 3,681. Goldman Sachs maintains buy, hikes target price to 3,800. BofA maintains buy, target price of 3,650. Macquarie maintains outperform, target price hiked to 3,643 from 3,511. Everybody has hiked target prices. Could be one interesting auto stock for the morning.